Okay, no change in policy. That, of course, was on expected lines. That would flash soon, but we should have Lata joining us soon with details of
the bank
policy
Nifty
language.
is not relieved. Yes, it's gone along expected lines, but we're not seeing sort of a major relief. Okay, now it's a little better. 100 points down still on the Nifty bank. Lata is with us. Lata.
No cut and a little hawkish, I would say, because the inflation forecast has been raised for the last quarter to 4.3 to 4.7. The original forecast was 4.2 to 4.6 CPI by March. Now they've raised the inflation forecast, so this will have to be a neutral to hawkish policy. The growth forecast has not been changed at all. It remains at 6.7. But since there are loads of conditions and reasons given for raising the inflation forecast, I think you will have to watch the bond markets. I expect the yields to rise. Although there is no cut, the accent is that inflation is worse than they would like it to be. And let me just read out that relevant paragraph where they have increased the inflation forecast. The October bi-monthly statement projected inflation to range between 4.2 and 4.6 in the second half, including the impact of HRA by the centre. The headline inflation outcomes have evolved in line with projections going forward. Inflation will be influenced by the following. First, moderation in the non-food, non-fuel part observed in Q1 has reversed. That is, they are worried that core inflation has remained sticky. Second, the impact of HRA by central government will peak in December. The staggered impact of HRA by state governments will push up housing inflation in 2018, and there will be second round impact of that. Third, the recent rise in crude prices, especially OPEC's decision to maintain production cuts. In such a scenario, any adverse supply shock due to geopolitical developments can push up crude prices. Of course, there is a reason they expect vegetable prices to fall in winter, and the GST cuts will bring down some products. On the whole, this is the statement. On the whole, inflation is estimated in the range of 4.3 to 4.7 in Q3 and Q4 of this year, including HRA. And in the guidance paragraph as well, there is a lot of insistence on the dangers of inflation. The MPC notes that the evolving trajectory of inflation needs to be carefully monitored. Two of the key factors determine cost of living indications, food and fuel, have inched up in November. Inflation expectations in the RBI survey also went up. Then they found that a lot of input costs are getting passed on by producers, manufacturers into retail prices. As well, the impact of GST cuts could result in fiscal slippage. These are the three reasons why they are worried. Nevertheless, because there is still output gap, there is, capacity utilization slack, they are not going to increase. The MPC remains committed to keeping headline inflation close to 4% on a durable basis. Well, over to you, Anuj. Have yields risen and Bank Nifty fallen?
The Bank Nifty did fall immediately after that, Lata, but after that we have seen a bit of a sort of comeback for the Bank Nifty. And even if you look at the money market reaction, it's actually been quite interesting, especially the dollar rupee. If you take a look at that intraday chart, that should come up for you now, 64.42, and the bond yield actually 7.067. Lata, absolutely no hardening in the bond yield. Let me take first thoughts then from our expert. Yes, Lata, please go ahead.
No, I just wanted to get from Sajid what he made of it, an upping of the inflation forecast and no change in action.
At all. I mean, all of us were signaling earlier that inflation is on course to, no surprise at all. I think both from the tone and tenor, all of us have been saying for a while that inflation for the first time in many quarters is on track to exceeding the RBI's existing forecast. So, at some level, the decision was, do they signal upside risks or do they move the baseline? They've decided to move the baseline. But outside of that, really no surprises. I think the tone is very similar. We had worried about core inflation going up in the last 2 months. They've signaled the concern on core inflation. Fiscal risks have risen. They've signaled the risk on fiscal. So really no new factors that haven't been documented before. You have to lay out those upside inflation risks with the fact that there's some slack in the economy, which they point out. So, for me, this was a non-event of a policy, and I think, for the foreseeable future now, the RBI will comfortably be on hold.
Okay. I want to speak to Sunil Srivastava as well of SBI if he is on the line. But before that, Anant, how would you read this upping of the inflation forecast and no action? From the way it looks, it doesn't look like there is going to be a cut at all if their trajectory works out, because they reiterate their commitment to keeping inflation close to 4% on a durable basis. Bond yields, how should they move?
So, Lata, I think this is along expected lines. A marginal shift in inflation is
Even
fine.
The upping
we were
of
expecting
inflation?
a hawkish tone to the policy. It's by 10 basis points. I don't think it's the end of the world. We were expecting a hawkish bias, even if they retain the old 4.2 to 4.6 range. And the markets were factoring in a fair amount of bearishness. I can't see where the market is currently, but even if it does pop up a little bit, I'd be surprised if it sustains there. I think the markets will pretty much remain where they were before the policy. It'll be interesting to see what they see at the press conference,
now.
though. Yeah, so thereabouts. I mean, no real big change as such. I think this is pretty much expected. The markets were factoring in a hawkish policy, and yes, nobody's expecting rate cut talk at this point in time. It was interesting to see that Mr. Dholakia was still voting for a rate cut, so more power to him. Dollar rupee, I think, has come off a little bit. Again, a little bit of hawkishness on policy rates tends to bring strength to the rupee, so maybe you'll see a bit of movement on the dollar rupee, but otherwise pretty much along expected lines.
No, you're right. Mr. Dholakia has voted for a cut. The others have voted to stay pat. Sunil Srivastava, do you think this is the end of the cost of money falling? Would the cost of money rise at all with this policy or hereafter?
See, at the moment, the inflation forecasts have been marginally raised, and the core inflation being one of the risks, apart from fiscal slippages. So we don't see the cost of money going, being increased or reducing very materially going forward. But with the oil prices being where they are, and we are seeing signs of incipient credit growth, I would say the RBI has been neutral to cautious. And I guess this is the right stance to take. Okay.
Well, Anuj, I hand it over to you. I guess you have to get statements from the equity market participants as well. If Ajay Srivastava is with us and Sachin Shukla of M&M, I have to go over to attend.
Sure, Lata, you do that. We'll take it from here. Of course, the currency market obviously had a much bigger reaction, as Anand was also pointing out. Normally, hawkish statement means support for the rupee, and that's why you've seen this move now of the dollar rupees off the high point. I just take Ashwini's thoughts on this, because the market is now once again from the high point slipping a bit. Ashwini, did the market give you another opportunity, or the traders another opportunity to go short? I mean, event is over now. What's the call now for last hour?
See, policy is not positive. Whether it's expected or not, that's besides the point. I think the market gave you a fresh shorting opportunity. Now your 3 minutes are over, and from here we should follow global cues. No more rate cuts. RBI is hawkish. I would think Bank Nifty should close at the lows of the day, because chances are that more people will get short, particularly on PSU banks, etc. So I would expect more downside even by the end of the day, and decisively I think we've broken below 10,180 thereabouts. So that way also we are now in sync with the global markets and should fall from here.
Yeah, pretty much at the lows of the day. That's how it is playing out right now. We'll just get back to our policy discussion. Bosch, maybe that's one stock we can look at, because suddenly there's a fair amount of selling pressure that's kind of coming over there. But Sajidanand, your interpretation of the policy and the number of factors that the RBI enlisted while giving that upwards revision to the inflation projections, which one of them could you say could perhaps be potentially fairly serious to see a breach of this range on the upside?
Okay, firstly, I don't really think that this policy is necessarily more hawkish. The way I see it is the previous policy was more hawkish and more conditional. What they've done is they've just aligned their inflation expectations slightly with that of the market, because everybody is now expecting surprises on inflation on the upside. Maybe the RBI didn't really want to send shock waves or scare the market, but I think they're just gradually aligning the inflation expectations. And I think the real action, so the risk that I earlier pointed out, I think the fiscal slippage part is more of a meaningful scare for me, because inflation prints we all have been monitoring, or we are all observing how the core numbers have been very steady. We've been observing food price behavior, but I think the real risks to me is the fiscal slippage from here on. Okay. And I think in terms of interpretation, the real action now may be outside the policy, which is liquidity management.
Okay, fair point. The market is now slipping, in fact, at the low point of the day. And just pull out the intraday chart of HDFC Bank. Now, that really has been the problem point for the Bank Nifty, Surabhi. You could get away with the Union Bank falling 4%. You could get away with I dare say even a Bank of Baroda falling 2%. But when HDFC Bank starts to make low point of the day, every other day, then that's a bit of a problem for the market. Not by much, I must add here, but that's the move on the Bank Nifty. Of course, 55 points gone on account of ICICI, 50 points on account of SBI, 45 points on account of HDFC Bank. These really are the big ones, of course. So that's one pocket not doing well. In fact, now 70 point lower is what we have on the Nifty.
Yeah, so it's financials that are looking tentative. The Nifty Bank is down a whole 200 points now with that move on the HDFC twins, also State Bank of India. We've got our eye on the screen, but Sajid, back to you on the next expectations from the RBI. Are we now, because they've retained GVA, they've taken note of a slight improvement in infrastructure. I mean, there's a bit of a positivity there. Yet the fiscal situation. So are we looking at a longish hold from the RBI? Do you see a move either ways, in the near future?
I think on an as-is, where-is basis, I don't see a move in the foreseeable future at all. I think the way to think about this is, if one believes, as we do, that inflation in 2018 is going to range somewhere between 4.5% to 5%, there'll be base effects. The second quarter will be higher, third and fourth quarter will be lower because the HRA effect rolls off and the GST effect rolls off. But if you look at underlying inflation, it will be sort of 4.5% to 5%. Then you subtract from that the 40 basis points of the HRA allowance, which is the center alone. So if the RBI believes net of that, inflation is at 4.5% or thereabouts, and core inflation is approaching that number, that number clearly is above the medium-term 4% range, and therefore will preclude any desire to cut rates. But that's not at a threatening level where, at least at these levels, the RBI needs to worry about hiking. So I think we're in this, at some level, comfortable hold for the foreseeable future range. Now, what could throw this off? For me, I worry less about the fiscal, because that's a policy variable. I think the track record of this government is very good. Even if you find a little bit of slippage at the center this year by 0.2, 0.3, my sense is we'll still be on a consolidation path. I think for me, the wild card is oil. You see, if oil were to tick up another $4 or $5 from here, because we have not seen these oil prices passed on. So I would argue the prints in November, December, January are not catching on the last 10% of crude. If oil were to stay at these levels and move up, that creates more upside risk. Conversely, if oil were to drift back down to, low 50s, then the debate will change again. So I think that's the real wild card, commodity prices for me. But otherwise, given where we are on growth, fiscal, current account, inflation, core inflation, I think, for me, all of 2018 or most of it will be a comfortable hold by the RBI. Okay,
comfortable hold by the RBI. The market is slipping. I think we should have the governor. Okay, I think the governor is about to start.
Anuj, interesting divergence. The bond market has taken this policy in its stride. It's the equity market that's far more worried.
The bond market had factored in
with the hardening. I take your point.
So we discussed it at the start that bond market has factored in. I think the equity market was just waiting for it. It's now global factors taking over for equity market. Let's make no mistake about it. It was holding on just for the policy. Now global factors are taking over.